Did you think the situation in China with real estate had been resolved? Absolutely not. In fact, it's gotten a whole lot worse as the dominoes continue to fall. All of that and more. Let's go. If you're a subscriber to this channel, you know I've been covering this very closely, and it continues. China's Evergrande shares briefly plunged more than 10% after a $2.6 billion asset sale falls through. There have been so many levels to this, and we got to remember what's happening here. You have not just one company, but seemingly many companies in the property sector that are starting to unwind. And this is something that is massive because it is trillions upon trillions of dollars of assets in real estate in China that are holding this all together like glue, but that glue seems to be wearing off. Heavily indebted Evergrande was in talks earlier this month to sell parts of its services unit to Hobson Development Holdings, its smaller rival. Hobson said that the talks fell through to purchase just over half the shares. I had shown you that. I believe it was 51% precisely, and that didn't happen. The collapse of the Hobson deal comes as Evergrande faces the end of a 30-day grace period for a closely watched $83 million interest payment to investors in an offshore US dollar denominated bond. So the concern here is not more so the people in China right now onshore. We're talking about offshore, and that right there would represent defaults that go outside of the current trajectory in what they believe will be the best case scenario. I don't think that that's happening. Based on all the details we have, it looks like it's getting much worse. Evergrande is just the beginning. Professor says more firms must exit China's property sector. Now, anything like this, any sort of prediction, we need to take it with a grain of salt, but simply listen to what they have to say. China's real estate sector has to be substantially smaller to keep the overall economy healthy and stable. That I agree with. We have too big of a risk in the sector. We've built too much housing, so the stabilization first has to come from trimming the sector. He estimated that about 20% of China's housing stock is left vacant, yet developers continue to build millions of new units each year. You know what happened with the ghost cities and so on, and this only represents part of what they're trying to accomplish. Getting people from the rural areas moving to the cities, keep the development going, keep the economy going, use public works projects, make things happen. And of course, some of those ghost cities had started to become populated over this period. But you can't continue this forever. If it behaves like a Ponzi scheme, certainly they are going to encounter some problems along the way. Chinese developer Cynic defaults amid Evergrande contagion. Like I said, it's not just Evergrande. I've been telling you that since day one, bringing this up to you related to Evergrande, and here we are. Firm earlier warned that it would fail to repay $250 million note. Grace period is coming to an end for Evergrande, as we just talked about a moment ago. So here you have their credit rating being lowered. And this is important because some of these funds cannot hold certain types, okay? If it gets to a certain level, it's considered a junk bond. A lot of them have to sell it. So that creates a cascade effect. Cynic warned earlier this month that it didn't expect to repay the dollar bond that may trigger cross defaults on its other two notes. We expect this non-payment to trigger cross defaults and accelerate demand for repayment of the company's other debts, including its US dollar bonds and domestic loans, some of which are already overdue. Okay? They're telling you here that Cynic is much smaller than Evergrande. That's absolutely true, but the risk is still there. Was Lehman Brothers a massive organization? Does it take a massive organization to necessarily create a domino effect? No, that's the whole point. Okay, that's the thing. It isn't something that is necessarily even going to become something that just completely topples the entire global financial system. But we need to know what's going on. They just talk about the China's dollar junk bonds earlier this year rising to the highest in about a decade. So that gives you an idea of what's been happening here. And I think that when you look at the debt markets, they are just going crazy right now in China. Deal to sell 51% of the property services unit is put on hold. This is a Reuters article getting into the depths of this particular company, okay? Cynic, they formally declared default, and Kaisa was crunched by another credit rating cut. Again, more and more and more companies are being affected by that. They have more in here if you're interested. I simply just want to highlight that it's more than one. It's not just Evergrande. China's central bank said the risk posed to the domestic economy by Evergrande can be contained. The property firm's trouble, this is a quote, check this out, casts a little bit of concern. And that's according to the People's Bank of China governor. So if you can get even that much, you know that there is real concern. They're talking about Fantasia, they're talking about Cynic in here, they're talking about Evergrande, of course, but it just shows you how serious this really is. And what's happening with real estate itself? Well, at this very time, perhaps you could argue this is not related at all. China home sales slump 17% as Evergrande saga deters buyers. Whether or not that's the case, nobody really knows, but I do think that we have problems going on in the whole world where prices have risen considerably, okay? And at the same time, you've got the consumer sentiment that has declined. A lot of that has to do with the fact that the prices have risen, but still, there are concerns about what's happening in the economy as a whole. In the property market, 70-city average property price fell marginally on a sequential basis, the first decline since April of 2015. So that just gives you an idea from Goldman Sachs. And then showing you here on this one, much fewer cities saw higher property prices in primary and secondary markets in September. So again, just showing you what's happening as a whole. I always like to bring you as much of the full picture that I can within, these videos. This is just again showing you the China's dollar junk bond yields hitting a decade high as the rest of the world looks on. Comparing the black line, if you can see that, that's China, okay? High yield index going off the charts because there's a lot of risk. And then you compare that to emerging market USD, okay, that's the blue line, and then just showing you CAA rated US high yield index. I mean, it looks like a blip on the screen in comparison to China, which is approximately at 20%. 20% right now. And then we move to this really quickly. Two things. China's curbs on fertilizer exports to worsen global price shock. At this time, all of this adding up. And yet one more factor. Are they going to be able to control this? Are they going to be able to actually do what they say they're going to do? I don't know. But I'll be watching it for you, okay? Looking at all of this just gives me this idea that there's something much bigger than even they are willing to admit, and it is unfolding before our very eyes. Inflation is off the charts, and people need to be aware. People need to take precautions right now at this time. If they haven't already, my goodness, it is way overdue. China weighs coal market intervention to end the stunning rally. And they're just essentially saying they're trying to output more, but at that same time, they've got so many problems in addition to, everything else that's been happening. And then last one, China's magnesium shortage threatens the global car industry. Production curbs in the country have skirt stockpiles of a key ingredient to make aluminum in vehicles. So you've got the supply chain, so many levels of it, and yet the people so dependent. And this is the problem that we have. And unfortunately, there doesn't seem to be any resolution. What can you do? You can buy today to lock in the price. You can look at what's going on in many companies that will effectively take advantage of the inflationary factors. So if your gas prices are going up, like I mentioned back in my book, which released in 2012, if you're worried about your gas prices rising because oil is rising, well, investing in oil may offset those gains. That's the way that you need to think about it. But, I digress. I just wanted to show you that, talk about it. I hope this was informative to you. If you want to support me, hit that thumbs up. If you want these videos to end up in your home or in your suggested, in all of your videos that you get, make sure to hit the thumbs up. It's that easy. It's right down there. Click it, and it's so key. If you want to check me out, on all these different platforms, I'm there. Podcast platforms, anything you could think of, I'm there. The Money GPS.